All right, well, good afternoon. Welcome everyone to today's ANZCCJ Technology, Innovation, Education and Research Committee webinar, Fintech or the Future of Fintech, Key Players and Australia-Japan Collaboration. It's now just over a year since we first established the tier committee, so it's really nice for us today seeing a real mix of familiar faces, as well as so many people joining us for the event. It's been a very busy, but this year's gone very quickly, so we're excited to see what else might be in the works in the next few months. As many of you know, earlier this year, our tier chairs, Kohei, Tim and Yoshifumi, identified fintech as a key topic of interest. But we want to say first a huge thank you to all of the members, and especially to the Australian Embassy and Austrade for all of their support in coordinating an excellent lineup of speakers for today. To begin the session, I'd like to hand over to Vivian Lim, the Austrade Trade and Investment Commissioner to Japan and the Councillor for Commercial at the Australian Embassy, to share some context and her thoughts on this very important and very growing sector. So thank you very much, Vivian.
Thank you, Emily. Good afternoon all, konnichiwa, and welcome to today's Future of Fintech session. Thank you in the CCJ for organizing this session, and also Fintech Australia, Fintech Association of Japan, and Phila for taking the time to present to us today, and of course all of you for joining us. There is a growing interest of fintech in Australia by global players, and its ongoing evolution in terms of market drivers, technologies, and use cases. This presents an abundance of opportunities for many. Australia has a beckoning fintech sector, which is growing at a time when other economies are still struggling with the impacts of COVID-19. According to Finexable, Australia's fintech sector ranks 6th globally and is ranked 2nd in Asia in 2021. Global VC investment reached its 2nd highest level in 2020, with fintechs attracting 42.3 billion in VC investment. Data suggests foreign investment in Australian fintechs has grown faster than the country's competitors. In addition, the next generation of fintechs, those utilizing emerging technology, have the power to completely reimagine the future of both business and customer experience. As an existing innovation hub and with increased foreign investment, Australia has the potential to drive world-leading fintech innovation. The fastest growing categories we have found are blockchain, cryptocurrency, insurtech, and neobanks in Australia. We're also starting to see increased levels of corporate M&A activities as traditional financial institutions show an interest in the fintech product innovation and technology areas, which can and will assist to pivot their core business to new lines of business, enabling them to stay competitive and relevant to their end users. Similarly, in Japan, the fintech sector is predicted to grow to 1.21 trillion yen, or Australian dollar 15 billion, by the end of 2022. This is a 6-fold growth from 2018, according to Yano Economic Research Institute. It is therefore very timely for our two markets to meet today to learn of the opportunities and possibilities in both our countries. If you're interested to be connected to Australia, or if you're from Australia to connect with Japan, please don't hesitate to contact us at Austrade. We're here to help. Without further ado, I'll hand you back to Emily, who will introduce the other speakers. Thank you.
Thank you very much, Vivian. That's provided some really great context for us to start off the session today. So we'll now move on to our panel discussion, but to begin, we're going to invite each of our speakers to start off with a quick presentation to better introduce themselves and their organisations. But first, please just allow me to introduce them all to you. So to begin, we have Brian Collins, who is a board member at Fintech Australia and the Fintech and the Food Tech Managing Director at Startup Bootcamp Australia. Previously, Brian has worked for some of the largest financial companies in the world, including UBS, MasterCard, and Money 2020, while working with hundreds of startup founders to expand their business globally. From the Fintech Association of Japan, we're also glad to welcome Eriko Nonaka and Takeshi Kito. So Eriko, prior to joining the Fintech Association of Japan in 2019 as Secretary General and lead of the Global Partnership Team, worked at SoftBank as a business developer, expanding SoftBank Vision portfolio for the Japan market. Takeshi is Vice Chair of the Fintech Association of Japan and leads the Capital Markets Committee and Regulatory Tech and Supervisory Tech Committee. He's also the founder and CEO of P2P Real Estate Equity Crowdfunding Marketplace, Crown Reality, and sits on an advisory committee for the Government of Japan's Regulatory Sandbox. Finally, we're also joined today by CEO and co-founder of Filler, Chris Koch. So prior to his success with Filler, Chris founded OneForm, which is an online tenancy application that revolutionized the process of applying for rental properties in Australia. With his leading domain knowledge of online forms, Chris then launched Filler, which is an autofill as a service to increase conversions on mobile. In 2016, Chris secured $5 million of Series A funding from major international venture capitalists led by SoftBank China, Alibaba's single largest investor. And then in 2020, Filler was acquired by Rakuten Inc. of Japan. And in moderating today's session, we're also very glad to welcome ANZCCJ member Luke Bradshaw and co-founder of South Australia Japan Synergy Alliance. So a huge thank you to Luke and to all of our speakers for so generously sharing your time and knowledge with us today. So thank you all again, and I'll hand straight over to you, Luke.
Thank you, Emily. Appreciate that. Thanks everyone for coming today, and everyone and the guest speakers for all their time today as well. This is definitely an exciting event today, definitely personally for me, and obviously for everyone as well that is here today as well. So Brian, if we just maybe just jump into you first, and just if you can just be happy to just provide a little bit of a background, sort of introduction, a bit of a background, what your company does, the history of it. Yeah, that'd be great if you could.
Absolutely. Hello, everybody. As mentioned, I'm Brian Collins. That's a picture of me back when I had hair before COVID. At some point, I'll take a new picture. But I haven't exactly, here in lockdown Melbourne, haven't exactly had a chance to take a new headshot. So one day, we'll get there, one day. I just want to thank everybody for coming. I think these types of sessions are really important. I was on a similar session with the Indian Chamber of Commerce last week, and this session as well. And I think, you know, in our current times and in current COVID situations, I think it's really important to continue to be opening up conversations and to be opening up dialogue between different areas and different regions. I find these to be good ways of starting points of how to open up those conversations. So I want to thank the organizers, and I want to thank everybody for their time here today. Greatly appreciated. I'm not going to be sharing anything. I'm just going to kind of talk a little bit about Fintech Australia, a little bit about what we're doing and what the fintech ecosystem in Australia is looking like, and then we'll pass it back to Luke, and we'll go from there. But essentially, at a high level, and just before we get into that, you can tell from my accent, I'm not from Australia. I'm from California. I spent most of my life working in Silicon Valley. I've been working in the startup space for over a decade now, working with companies and startups to help them build their business models, help them to build their international expansion plans and to grow. And until a couple of years ago, I used to call myself an accidental fintech person, in the sense that, you know, after working in the industry for 8 years, I don't think I can call myself accidental anymore. But at the time, I said that because I had no immediate intention of going into fintech. I don't have a finance background. I never worked as an employee at a major financial institution or at a major bank, for example. But I've found over the years that I've consistently been drawn to fintech for a few reasons. Before I go into that, however, I just want to say that I've been working in Australia since 2011, working with Australian founders and the ecosystem for a long time. And for those of you who haven't done business or worked in Australia before, I'll just give a little bit of my experience. So I mentioned I started working with startup founders over a decade ago. That was primarily in the mobile application, mobile app space, back in what used to be called the golden age of the App Store, back in 2011, 2012, and 2013. Why I bring this up is as we were expanding and launching apps globally during that time, we've consistently found that it was Australia where we would test out our new launches. And there's a bunch of different reasons for that. One is because Australia is an extremely well-off nation, but yet at the same time, a cost per acquisition and the retention rates were much lower, and the retention rates were much higher than other portions globally. So if we were looking to do a big expansion into Western Europe or North America, for example, it was often cheaper for us to test and get our modeling and data correct in Australia before doing a larger launch than elsewhere. But we also then found other reasons to continue to test in Australia. Oftentimes we were looking to expand new businesses into India or into China or into other parts of the world. And we, instead of focusing on those countries specifically, where you'd have to spend quite a bit of money localizing to local customs, local languages as well, we would actually again start in Australia and focus on diaspora groups in there. So before we'd launch in India, we'd focus on Indian diaspora communities in Australia and target them to see how they reacted before we move into other markets. So Australia, for me, I live here now, but for the last 10 years has been an important part of my kind of international expansion strategy, whether I was working with a mobile app marketer or whether I was helping MasterCard launch their open API suite back in 2015. In all of these cases, we often made Australia our testing ground. And I think that's an often overlooked part of what can make Australia so powerful. Now, to just take that experience and zoom back out to talk about what does fintech look like in Australia currently? Compared to when I first started working in fintech in Australia in 2015, the ecosystem and the economy and everything has exploded. And Fintech Australia is very much at the foreground of that. And I'm so pleased to be a board member and to be representing Fintech Australia today. Fintech Australia represents and looks over all of the different portions of what you would consider to be fintech, from lending to and mortgages, personal finance and wealth management, payments and billing, insurance, capital markets, regtech, blockchain, crypto. We have members across all of those different areas. In fact, we have over 350 members in Fintech Australia these days. They include some of the biggest fintechs in the country, which include, for example, Judo Bank and Airwallex, both of whom are some of the largest fintech raises, investment raises last year. Somebody else mentioned earlier how much money is being invested in fintech globally. It's 1 out of every $2 invested globally in startups are being invested in fintech. And we're seeing larger and larger raises happening from the Australian fintechs that are part of our member ecosystem, Judo Bank and Airwallex being some examples. That's not all. We also have international players like Xero and Binance, but we also have companies like Afterpay, who some of you might have seen recently acquired by Square for over $40 billion. It's a great example of the ecosystem's growth. But we don't just work with very large fintech companies. With 350 fintech members, we actually work with a variety of companies. The average size of the business that is a member of Fintech Australia is about 10 full-time employees. So we actually work with people all across the ecosystem. Now, fintech in Australia is still mainly focused on the east coast of the country. We're seeing really incredible examples of Western Australia and Tasmania, South Australian fintechs as well, but the vast majority of fintechs in Australia are situated in Queensland, Victoria, and New South Wales. In fact, 55% of our members sit in New South Wales currently. So it's the vast majority of where our members sit. And a couple of other pieces around what Fintech Australia really does and how we work with these startups is we're a key bridge to help fintechs expand to get different benefits, offerings, open up communication channels. But one of the most important things we do is policy and regulatory guidance and governance. We've submitted over 20 different policies to the Australian federal government. We work with the federal government, the state government. We work with local governments to try and help make fintechs stronger, to make the ecosystem grow further and faster. So I guess I don't want to take too much time, but I guess just very quickly in conclusion, personally for me, Australia is a fantastic market if you're looking for a market to expand into for a variety of reasons. Fintech Australia is the leading organization making that change happen for our fintech partners across Australia. And I look forward to hearing more through the conversation and seeing any questions that you might have. So hopefully that gives you a good sense of the quality of fintechs and the way the ecosystem is moving here. And I'll just kind of end with, we're a small nation. There's 25 million people in Australia. But at the same time, we're seeing fintech become a larger and larger part of the national conversation. We have a federal minister where fintech is a part of their name, of their title. So it just shows that we're punching above our weight class here in Australia with fintech. We're seeing larger raises, we're seeing larger deals come through, and I think this is just the beginning. So I'm really excited to hear what we talk about today, and thank you all so much for having me.
Thank you very much, Brian. That's fantastic. Great overview there. It's exciting to hear how important fintech is in Australia, how broad it is across the states as well, especially personally within South Australia. So it's great to hear there's a bit of activity going there as well. So thank you very much for all that. Much appreciated. Nana, if we can go across to you, if you don't mind, and just provide a little bit of an introduction for yourself and also the Fintech Association of Japan as well. That'd be great.
Okay, thank you. Nice to meet you, everyone. This is Eriko Nanaka from Fintech Association of Japan as Secretary General. So first, let me introduce our association just shortly. So can I share my screen? Okay. Okay. Fintech Japan started our activity in 2014 as just casual meetup and founded as association in 2015 with many support from financial institutions and fintechs. And we have 15 board members from the board member of fintechs and lawyers. And now we have over 400 membership companies consist of over 150 fintechs from various categories. And also around 300 financial institutions and big enterprises join us, like system vendors and technology company and trading, also various companies. And we are welcome not only fintech company, every enterprise who are challenging to jump into fintech business we are qualified to Fintech Association member. And here is one of our main activity is the subcommittees. It's divided to 10 categories like compliance, lending, insurance, cashless, money transfer, regulative subtech, capital markets, online factoring, cybersecurity, data transaction. Each of directors owns their subcommittees and develop the API or any cybersecurity guideline. And also we provide various events like FinTech Meetup, workshop, and a monthly meetup to report our activity and introduce newcomers. And how the yearly biggest conference in Japan called as Fintech Japan. Then we have also pitch battle for fintech startup and provide then rewards. And also we provide business matching function and that support business matching among our membership companies. And also we have an relation with government, like as digital agency, Mr. Hirai-san, and FSA and Tokyo Metro government. And like Fintech Australia, we have global partnerships with Global Fintech Association and Embassy and JETRO and any stakeholders are like this. Now, we probably over 30 Fintech associations MOU. Okay. This is the overview of Fintech Association of Japan, and I'm looking forward to have the panel discussion after this. Thank you.
Thank you very much, Norika-san. Much appreciated. Thank you very much for that overview. I think the digital agency is in Japan is a great opportunity as well. And I wouldn't mind maybe asking a question around that during the Q&A session. Next, if we can head over to Chris Kosh, just from Filler, and if you could just give yourself a bit of an introduction and also just a bit of a history of your company, that would be fantastic.
Sure thing. Thanks, Luke. And look, can everyone hear me okay? Because I just switched to my AirPods, so I want to check you can hear me. Fantastic. Look, I really appreciate being invited along to this panel today. I appreciate Phil as a company that not many of you may have heard of. However, every major buy now, pay later company is actually using our technology, and I'll tell you a little bit of the journey of how that actually came about in the first place. So, Filler is not the first company that myself and my best mate have founded. We had another company called OneForm here in Australia that we built to help tenants and property managers manage the tenancy application process. So when you look for a place to rent, you have to fill out a paper form years ago. And rather than filling that out over and over again, we built an online system. We did it once and never had to do it ever again. However, the name OneForm is actually very deceiving because every single real estate company in the country had a different version of OneForm. The tenant got the benefit of having to fill it out once, but we actually had to dynamically change and recalibrate that form when it hit the agent's inbox. And we realized that as we were exiting out of OneForm, and by the way, we literally sold every possession that we owned to put food on the table while we were getting that company going. We sold my car, we sold my best mate's car, we sold CD collections, and then eventually ran out of things to sell and raised some money from the gentleman that founded Car Sales. And then we eventually ended up exiting the company and selling it to realestate.com, and I got the Car Sales guys a 15x return on their investment. So they said to us, look, we're happy to back you into whatever you want to do moving forward, which was then Filler. And sorry, I realize that might not sound relevant, but it shows you our DNA, it shows you our whole philosophy as a company coming through. Our vision was to not have people have to repeat data when they're transacting. And that's where we came up with Filler. With OneForm, we had to build the form. And we realized that we couldn't build a form for Bank of America, for Expedia, for all of the millions and millions of merchants and sites out there. We said, hang on, how could we let everyone keep their existing forms? They've spent millions of dollars getting the conversion rates on. How could we let them keep those forms and just inject data into that form? And that's where Filler, which is essentially autofill as a service, was born from. And it's funny, even the word autofill doesn't really do us justice. When we were going through our Series A round, which we eventually ended up getting funding from SoftBank from, people would just go, autofill, that sounds a bit basic. It's in my browser, Chrome's got it, Safari's got it, but the accuracy is really quite terrible. And so we have eaten, slept, and breathed this problem set, and our accuracy in being able to fill a checkout out without that merchant or that checkout even knowing that we exist has meant that we have an amazing ability to accurately fill a checkout instantly. And so the first really major client that we got was Rakuten, or it was called Ebates back in the day. It's now called Rakuten Rewards. And obviously because Rakuten Rewards, or the cashback app, sends you off to thousands of different merchants to shop, when you get to that checkout, Filler would fill your information instantly and the conversion rates went up substantially. The next big win for us as a company was Klarna coming to us and saying, I want to let my users buy now, pay later anywhere even at the sites that haven't installed my button. And we partnered with them, and I've got a video I could show that's only 50 seconds long if you'd indulge me that to show you how we do. We might need to move that later, but yeah. And after Klarna launched that product, every other buy now pay later company came to us and said, well, we need the exact same thing, because Klarna is essentially going over the top of a site I've signed. So if Afterpay had signed Macy's, Klarna was allowing their users to buy now pay later on Macy's, with Macy's not even knowing, and Afterpay kind of getting jumped over. So every other buy now pay later, Zip, Afterpay, Affirm, we work with all of them. So whilst I appreciate people on this call may have never heard of Filler, we're actually powering the tech behind all of these multi-billion-dollar companies that are doing BNPL. So yeah, look, if you've got 50 seconds for me, not even 50 seconds to show you a video, I can do that. But you know, Luke, I'll be guided by you on that, just to show you exactly how our tech works within the buy now pay later space.
Thanks, Chris. Yeah, look, yeah, we've got 50 seconds if you want to present that and show a quick video. That'd be great.
Okay, cool. Well, look, I'll share my screen, and hopefully you can see the video that's in the center of the screen. So this is a version of the Klarna app that they launched in the US. Now, when Klarna launched in the US, they had no existing merchants, they had no existing users. They obviously were huge in Europe, but they wanted to launch an app that would let their users buy now, pay later anywhere. And you can see that's the tagline on the home screen here, okay? We've actually got a search bar here where the users could type in for any sort of search. That's actually a Google search bar, that's how broad it is. But rather than boring everyone on this call with someone typing into that box, the video is just going to choose from one of these favorited stores. So what I want you to know is that we're in the Klarna app at the moment, right? So we click play, the user clicks on a favorited store. We then end up on that merchant's own website. So this is the merchant's own website, it's their own experience, but we're still in the Klarna app, we're in the Klarna web view. The user goes through and chooses a product that they like. They go, yep, I like this product. Let's have a look at it. They go, yep, okay, let's now add that to my cart. They then click checkout, and I'm going to click pause here for a second, because you'll see that the checkout then just filled instantly with all of the user's data. That's our filler tech going to work and taking data stored within the Klarna app and filling this checkout perfectly on behalf of the user. And this particular merchant has no idea that we exist or that Klarna exists. There was no need to go and pound the pavement, knock on the door and sign them up. So they scroll through the checkout, they go, geez, everything's been filled out perfectly, this is great. Credit card details weren't filled out. Now Filler we're magically great at doing this, but we didn't fill it out on purpose because the user didn't want to pay for the product. They wanted Klarna to fund it. So they click the Pay with Klarna button at the bottom of the screen. A user experience screen slides up and it says, how much do you plan on spending? You can see that $79.95 has already been magically pre-filled. Once again, that's our filler tech going to work, scanning the cart and pre-populating this. The user goes, yes, that's exactly how much I plan on spending. Klarna shows them the repayments over 4 installments. A virtual credit card then gets generated for $79.95. And we as filler then fill that virtual credit card in the checkout perfectly. The user clicks place order and they have purchased a product without paying for it. Klarna has funded it. The merchant's been paid in full. Klarna has a financial relationship with the client. And you can now see why every other buy now pay later company came running to us and said, we want the exact same thing. So, you know, as a startup that went through ebbs and flows and had to sell possessions to put food on the table, it was amazing to find what people talk about as product market fit. And so we were really, really happy when that sort of happened. So sorry for going on a little bit too long there, Luke, but I just wanted to give everyone a bit of background of what we do.
No worries at all, Chris. Look, thank you very much for that small presentation. It's great. The convenience there is amazing, and I've got a little bit of experience in the payment space, and that looks very, very interesting. So thank you very much for sharing that.
Thank you.
Okay, so I think what we'll do now is we'll jump into the Q&A session with our panelists, with our wonderful guests. And I think what we'll do is I'll open this question up to everyone to start off with. And I think Brian touched on it just a little bit before, but it'd be great to maybe get everyone's view on this one around what makes Japan and Australia an attractive market for international fintech companies. So jump in whenever you guys, whoever wants to go first, I don't mind.
I mean, I'll kick us off because Luke, you were talking about what I was mentioning earlier, and I'll speak to, again, the Australia side. I mean, for what we're seeing, what I've seen personally in my career, what we're seeing at Fintech Australia. I also forgot to mention, but my day job is I'm the Fintech and Food Tech Managing Director at Startup Bootcamp Australia. So it's a perfect mix, because with Fintech Australia, we're helping companies in Australia to expand internationally. With Startup Bootcamp Australia, we're working with international companies to come into Australia for the first time. And just what we're seeing consistently is it's one, as I mentioned before, it's a great test market. But beyond that, Australia is, especially for fintech, it's one of the richest per capita nations in the world. It has the 7th largest assets under management in the world with our superannuation firms, which is our pension funds. So there's it's a smaller population, but it's an extremely wealthy population and the margins on the financial institutions and ecosystems in Australia are really good. So if you get it right here, even though the population isn't massive, there's a reason that the big 4 banks in Australia are the most profitable, some of the most profitable banks in the world. So that's what I'd say on the Australia side. Now, I've had a bit of experience on the Japan side through a previous business where we expanded into Japan, and we're consistently blown away by the quality and the quantity of startups and fintechs, especially that were coming out of Japan, both that were focused on very Japanese problems, but also that are consistently focused on beyond just Japanese problems, focused on either regional problems, including from Japan to Korea through Taiwan and other parts. That seems to be a triumvirate that I see a lot of focus areas from Japanese fintechs, but as well as creating and building up truly global solutions. So one of the things that just sticks out to me on the Japan side is just the talent and the vision that comes out consistently from fintech founders there. But I'll let others speak to that who have more experience, just my 2 cents.
Thanks, Brian. And Nanaka-san or Chris?
Well, look, when it comes to the Australian market, and the Japan market is one that's new to us. Obviously, we got acquired by Rakuten, a Japanese company, and we're now working with companies like Paidy in Japan. So there's been some really interesting nuances between, sort of Australia, Europe, and the US as to Japan. But I'm really just echoing sort of what Brian was saying. The way the Australian market is, even though it's not huge in terms of population size, the sort of CAC, the cost to acquire a consumer, and then the LTV that you can generate from that consumer is generally much larger. I'm not as familiar with that in Japan as yet, although I'm on many calls with my Japanese colleagues at Rakuten. The one thing I would say, and sorry, Luke, this might not have been directed directly at your question. The markets are extremely different. I realize that's bleedingly obvious, but the way that forms and checkouts are structured in Japan and in Europe, US, and Australia is completely different. If you were to go to a checkout in Japan and start to fill it out, you don't really get billing, shipping, credit card. You have to enter your mobile number. You'll get a text back. You'll then enter that code. So as a startup trying to develop tech and hack around a checkout and understand how it works, it's actually a very, very difficult problem set to solve, because it's also very hard to get a Japanese mobile number, which we're now fortunate being able to get through being owned by Rakuten. But the design, the color schemes, everything within a Japanese checkout is very, very different to what you see in the rest of the world. And once again, Luke, I'm not sure if I answered your question there, but I'm talking firsthand from sort of our experience of being acquired by a Japanese company and them saying to us, right, go and take filler and make it perfect on Japanese forms. And just getting started was a very, very difficult process. We've had to focus on Uniqlo, obviously Rakuten Ichiban, and sort of the top 10 sites, which cover 80% of the volume. But the way you navigate through these checkouts is extremely different to the rest of the world. So, yeah, sorry, I don't think I answered your question at all, but that's just my experience.
No problems at all. Look, thank you very much for giving a bit more insight. I'm sure that what you just said, people would have picked up on. I think is a great opportunity there to. I think so we had a question around some of the challenges, coming into the Japan and Australia space, but I think you sort of covered off some of that as well. So thank you for that. Much appreciated.
Pleasure.
Nanaka-san, do you have anything around what's attractive for Japan and Australia that you've seen?
Sorry, Kito-san, I'm thinking so. If you have, please give your comment for them.
Sorry, my apologies. Kito-san, if you don't mind, that would be fantastic. Sorry about that.
I think to other two panelists' answers, I'd like to mention the mindset of regulator, FSA. And actually, before this fintech era, they are very domestic and bureaucratic, to be honest. But they are changing their mind recently. And they are currently very proactive to support fintech innovations and collaboration with fintech companies and financial institutions. So I believe this is huge. This brings huge opportunities to fintech companies to start fintech business in Japan.
Yep, thank you very much for that. Thanks so much, appreciated. Okay, so I think as we kind of touched on some of the biggest challenges with Chris there, does anybody else have any other challenges that you think in the fintech space with Australia and Japan?
Luke, can I add some things? Sorry, and that is actually address structure and format of the way regions and addresses are dealt with in Japan compared to places like Australia, the US, and whatever else. So that was the first thing that we really had to dive deep into and understand. The second thing is that many checkouts and forms that are requiring your information quite often ask for your name in hiragana or katakana, but then also want an English version of that name as well. And so for us being able to fill something out, we needed our schema to have English versions of your name as well as the Japanese versions of your name, and so on and so forth. So it wasn't as simple as, hey, we're filler, we know how to fill forms out. You actually need to understand context within each country, address structure, name structure, and things like that. So sorry, I just thought I'd add that as well.
I'll jump in on the Australia side from a challenges perspective, Luke, if that's okay.
Yeah, absolutely. Go ahead, Brian.
Two kind of blind spots that often people come in if they're coming in from outside of Australia. One is the regulatory environment in Australia, and the other is funding in Australia. And they're two very different kind of issues, but I think it's important to keep an eye on. And I just want to be clear, neither of these are insurmountable, but it's definitely things that you should be aware of if you're coming into the ecosystem. So on the regulatory side, we have not one, not two, but three different regulators in Australia who all focus on different things. The vast majority of fintechs are regulated by a group called ASIC, or the Australian Security and Investment. I just blanked on what the C is. Corporation, committee, I forget what it is now. Anyway, ASIC. Yeah, thanks. ASIC, so ASIC. Now, ASIC does have a regulatory sandbox, like many other groups in the, thanks, Tim, like many other groups in the, or many other fintech ecosystems globally. However, the ASIC sandbox can be difficult for those trying to go through it. It's not as fast as some of the other Singapore is often the gold standard of this when we think about fintech sandboxes. But it can take time. There are a lot of questions as you go through that. It's not always the most transparent process of what's being approved and what isn't. So it's just something to be aware of, that if you don't have the ability to get an Australian Financial and Securities license, an AFSL, which is the thing that actually allows you to run most fintech businesses that you need, those are things to be aware of. There are options, but it can take more time than other markets. The other one is just around funding. Now, what we're seeing consistently from a funding perspective is Australia is getting better and better at not just larger raises, but we're getting funding groups that are funding raises at larger and larger amounts. And that's been consistent over the last few years. We just saw Honey Insurance, which just raised the largest seed round in Australian history, which I think was a little over $20 million at the end of the day, 20 million Australian. So the rounds are getting bigger. However, there is still a gap in the market. And the gap in the investment side really is that early stage through to Series A. There are investors who invest in those spaces. Every day I see a new investment group that's raising funds to invest into those areas. But it's just something to be aware of, that if you're looking for funding pre-Series A, it can be difficult, not impossible, but it can be difficult. So it's just two areas of challenges that I think it's important for people to keep in mind on the regulatory side and on the investment side.
Thank you much for that, Brian. Appreciate it. The insights there. If we can, I suppose, go to a bit more of the I suppose more of the strengths between Japan and Australia in the fintech space. Kito-san, if I could start off with you, I suppose, what strengths could Japan offer towards Australia in the fintech space? I suppose as just a bit of an example that I'm a bit more, I suppose, aware of myself is more around like the QR code space. So Japan is obviously more experienced in that space, whereas Australia is kind of at the beginning levels of that. That's just, again, just an example. But if there's any other examples, please jump in and around any of that.
Yes, I agree with your examples. So, Alexa, could you share your opinion on the payment space, as you mentioned?
Sorry.
Sorry. Yeah. Payment space. Yeah, almost all payment player in Japan provide a QR payment. And when I worked for SoftBank, I discussed about the NFC payment with Optus. And Optus is the famous telco in Australia, and they provide Optus Pay. Now, they have so unique idea with NFC payment, and SoftBank members has interest for their idea. So this is the good collaboration, possibly, I think. Sorry, it is my opinion. So how about, yeah, how about Kito-san?
And from my end, other than payment industry, Japanese fintech startups and financial institutions have very, huge experience in the capital markets and the insurance space. So I believe this kind of strengths or industry expertise will help Australian startups or financial institutions to collaborate each other.
Excellent. Thank you very much for that. And if we could shift to Brian, your thoughts, I suppose, on the reverse side with Australia. I suppose, as in, with Australia being quite a cashless society and Japan being a little bit more still heavy on the cash, can there be anything there around that side of things, or again in different areas of the fintech space, I suppose, as well?
Yeah, I'm glad you talked about cashless. I mean, I remember one of the first major moments, just on a personal level, when I came to Australia in 2015, I suddenly realized that it was the first country I'd been to where every single place you could just tap. It was all phone tap, card tap, everything. And I hadn't seen that level of payment maturity anywhere else. And it's just continued. So Australia, from a payment perspective, it's one of the strongest parts of our fintech ecosystem. It's extremely vibrant. It's extremely powerful. There's definitely more. To be upfront, until COVID hit, majority of our payments obviously were cashless, but they're not being done through QR codes. In fact, Australians had to remind themselves what QR codes were when it came to checking in and everything else as we've gone through COVID. So we're still not, there's some parts of where we're seeing payments going that we haven't fully gotten to, but the cashless transaction, the speed of transaction, the way in which we're enabling transactions to occur beyond the typical transaction point, I think we're very advanced in those areas. Where there is a lot of opportunity in Australia are in some, there is just a lot of opportunity in Australia, period. And some is opportunity that we haven't seen, that we're just starting to see people go after. There's ones that I'm personally excited about. Then there's opportunities that are there because there's challenges in getting access to it. And so I might start with that one. You know, open banking has been around in Australia for quite a while, but we still haven't seen that massive, major open banking shift. And that's not from a lack of Australian interest. It's not from a lack of founders attempting to do so, or businesses and firms trying to get invited. A lot of that is due to the data that we have access to, and the data that the bigger financial institutions allow access to in the greater ecosystem. We still don't have really good large data pools that we can pull from, and good open banking APIs that we can connect to on a broad spectrum. There are individual examples where that's not the case. We have a fantastic Fintech Australia partner, Basic, that does a great job of providing really strong data that can be used for an open banking purpose. But that's still an area that I think we've barely scratched the surface of here in Australia. But then there's areas that I'm starting to get really excited about, both because they tend to be less focused on. InsurTech is getting bigger and bigger and bigger in Australia. We're seeing larger focuses on the insurance space, larger rounds. I'm also very interested and excited about the wealth management opportunity. I mentioned at the beginning of my talk that Australia's the 7th largest assets under management in the world. There's over $3 trillion with a T in assets under management because of our superannuation funds. One of the most interesting trends that have changed post-COVID is there's what's called self-managed super funds, or SMSFs. Self-managed super funds are now the 2nd largest assets under management in the country after the industry super funds. There are more assets under management being handled by individuals or by financial advisors for an individual than has ever been happening here in Australia before. And what's interesting about that is that opens up a whole new opportunity for the management of wealth and a wealth management B2C play that hasn't really existed in Australia before. So that's just another opportunity I get really excited about. There's a bunch of them, but those are probably the big ones, both from a, what are we being held back from a regulatory, or not regulatory, a kind of market perspective, and where has the market not fully tapped into yet? Those are some of the ones that I really think about a lot.
Thank you very much for that, Brian. If we can just move over to Chris, just around, if you don't mind, just maybe just sharing your experience with being backed by SoftBank and then also being acquired by Rakuten. I suppose, how was that initiated, and what was the process of becoming part of the Rakuten group?
Yeah, that's a great question. Because as I'm sure most people on this call might know, SoftBank and Rakuten are obviously maybe frenemies is the right way of putting it. They fiercely compete, but they obviously also have some partnerships and whatever else. And so what's interesting was that we as Phila many moons ago were actually looking to, we didn't feel that our revenues were growing at the speed that they needed to. And we realized that, you know, we just raised, not just, we'd raised our Series A 5 million, which SoftBank, you know, put a large chunk in and led. And we really wanted to make sure that we got our investors a return. And with the small amount of clients we were signing and the small amount of revenue coming through, we thought, okay, it's time to try and exit and sell this business. And funnily enough, Klarna was quite interested at that time and offered us stock in their company. And I don't even want to retell that story, because what the stock that we got offered, which today would be worth about 10 times what we ended up selling to Rakuten for. So I don't like retelling that story. But where I'm going with this, Luke, is that you know, you obviously as a startup company, you do tend to get an advisor, has connections, you know, out in the startup world that reaches out to some of these businesses. And in Australia, you know, it's typically the big accounting firms, you know, the PwC, the Ernst & Youngs and whatever else. And the justification there is that they obviously do the accounting for many of these big Silicon Valley or companies around the world. So they've got connections there. Now, when we first went out and looked to try and sell for a much smaller number than we ended up selling, we heard via the grapevine, whether this was true or not, and I don't know if I'm being brutally too open here. Oh no, Rakuten would never buy you because you've had investment from SoftBank, right? So that was a couple of years ago. We then looked at doing another round, a sort of Series B, and we were looking at raising sort of $7 million for Filler. And it was a family office that wanted to invest, and they wanted to speak to some of our major clients, Klarna being one of them, and Rakuten being another, to say, hey, do you enjoy using Filler? Is it working for you, and whatever else? Well, that investor reaching out to those companies and asking for a reference spurred Rakuten to go, oh, hang on, Filler, we love Filler. It's growing our conversions, dramatically. Oh, okay, let's reach out. So I got on a call. I got reached out to by the CEO of the Americas, Amit, and their head of M&A, Nasir. And sure enough, I said to them, look, guys, we've been working with you for a while. Great to have a chat. But we're about to close a $7 million round at X valuation. And they said, hold on, don't do anything. And next thing you know, we were acquired by Rakuten. So I guess what I'm saying here is that you hear some interesting stories. Oh, no, Rakuten would never buy you because you had SoftBank investment. Well, that's not necessarily the case, So don't always believe what you hear. And when your investment advisors tell you one thing, always keep being relentless and being resilient and pursuing every avenue you can is kind of how we like to roll. So, yeah.
Thank you very much for that. Thank you for that additional advice as well. Never to give up, I suppose. So thank you very much for that. If we can go across to Kita-san and maybe Nanaka-san as well, what kind of impact will the new digital agency in Japan have on the fintech space? Will you see any new opportunities in that space because I think that just went live in September. Is that correct?
Yes, it's established in the beginning of this month, and I believe this new ministry or agency will bring us to the huge opportunities to implement the digital solutions to the industry, multiple industries, and also this will help fintech startups or financial institutions to provide their financial solutions to other industries, because digital agency covers multiple industries. And in addition to digital agency, let me touch on the regulatory sandbox in Japan. And different from sandboxes in other countries, Japanese regulatory sandbox is established by the Cabinet Office. It's a Prime Minister's office. So this means our sandbox is not only for the financial industries, but for all industries in Japan. So that means we, fintech companies, can test their solutions, our solutions in multiple industries, and facilitate the cross-industry collaboration with non-financial companies. So also, Japanese sandbox is open to overseas companies, so Australian companies can use this sandbox. So with this sandbox framework and the digital agency, Australian companies and financial institutions can test their digitized financial solutions to in the Japanese market and expand their business in Japan as well. That's my answers. Do you have any opinions, Nanaka-san?
I'm okay, thank you.
Can I ask a question, Luke?
Yeah, of course.
So the sandbox sounds really interesting. I would just be curious to know a bit more on, is there any, what are the requirements to enter? Is it kind of a standard application form that you're filling out, or do you need to show that you have a bank account in country? I'd just be curious if that information is available.
Sure. Actually, we Japanese sandbox do not require the entity in Japan and bank account. So all companies outside Japan can use a sandbox. And the requirement is that experiment or testing plan can be arranged under current regulatory framework. So the sandbox team have a consultancy team. So if applicants want to know more about the sandbox system, they can having a session and answer questions to all applicants.
Got it. Thank you.
Yeah.
Thank you very much, Kitasan and Brian as well. Thank you for the introduction there. It's fantastic to join up. Okay, I think right now with time, is it we're ready to go for the Q&A from the audience, I believe. Does anybody have anything from the audience that they would like to ask Brian, Kitasan, Annika-san, or Chris-san? Sorry, Chris. So we can try and find some questions here.
Looks like one question got posted in the chat.
Yeah. What change? I think it's from Tim, and he's asked, what changes could be made to support fintech development in Australia and Japan?
I can take that. Yeah, I can take that one to start in Australia. I mean, I kind of mentioned it with the challenges if you're expanding into Australia, but it's the same challenges we face being in country as well. So, you know, I would like to see more, a little bit more transparency around the regulatory sandbox and a little bit more ease of access. But of course, I'm going to say that. I'm coming from the fintech side. The regulators are going to say something different, which is fine. But if we're waving a magic wand, I would love to be able to see more companies be able to test more propositions in a safe manner. So that's one big piece. And again, on the investment side, I think we're starting to see this. And I think that in the next 12 to 18 months, this is going to be a very different climate. But at least currently, it is still hard to raise funds in those areas. So there's a bunch of different ways to get people excited about that. And we're seeing some of this. So we've seen the Victorian government, which is one of the state governments here in Australia, that's opened up grants for early stage angel investment funds to co-fund those funds with private investors. I know that we've brought up as Fintech Australia in our position papers a few times changes to the early stage investment tax implications. So for example, the UK does this really well, where any investment below 150,000 pounds or below hits the early stage investment tax scheme, which makes it essentially a tax-free investment. We don't quite have that same depth of investment levels in Australia. It's not a full taxable piece. There are early stage investment opportunities, but they're not as in depth as some regions globally have had, and that's kept back the region. That said, again, I think in the next 12 to 18 to 24 months, the new funds that we're seeing, the new changes that we're seeing coming through are going to make those early stage funding better. One of the things I've been most excited about with that has been around equity crowdfunding, which has really taken off in Australia. More and more companies are taking advantage of it for their early stage funding. It's been very successful. Flipping hats to Startup Bootcamp for a moment, but we've been involved, or I've been involved with 5 different crowdfunding rounds at this point, 6 different crowdfunding rounds, all of which met their minimums and exceeded their minimums. One is tied for the fastest closing of any investment round. It was a $600,000 round, which closed in 48 hours. So we're starting to see changes there, but would love for more options beyond crowdfunding than to exist in the market. Those are probably some of the big ones, just to reiterate what was said earlier.
Thank you very much for that, Brian. We do have another one that came through the Q&A box. How do the fintech companies see potential disruption from crypto blockchain technologies. Kita-san, we can start off with that one with you if you'd like, if you don't mind answering that one.
Yes. Right. Yeah, I believe there'll be huge disruption from crypto and blockchain space. But in Japan at the moment, actually it's still on early stage. So many financial institutions are doing POCs, but actually it's still POC. So we need to develop commercial-based solutions and products from the experiments from that kind of experiments. So so again, I believe there will be huge disruptions, but we still need to wait for the actual solutions. That's my opinion.
Thank you very much. Brian or Chris, do you have any other comments around that one, around the disruptions with the crypto and blockchain side of things?
Look, it's an area, Luke, that I'm not as in depth in, but you know, when we look at it from our business perspective and the conversations that I know happen within Rakuten, there's so much more than. Obviously, these cryptos have exploded, and they're not going anywhere. But the technology in terms of speed of transaction and having it be a currency that can hold some sort of value a bit more consistently are the things that obviously everyone's looking for. So when we see that, obviously when we started to see the what was it, the funds that were sort of backing crypto or what was it, offsetting crypto, that's a step in the right direction, that the bigger markets are starting to take notice. But the fact of the matter is now, if you're going to buy something with Bitcoin, it still takes, I think, at least half an hour for that transaction to be validated. And so, you know, speed is really what, once again, I'm just talking from myself. It might sound very green because I'm not very crypto deep, but we're looking for speed in that area. And yeah, but obviously we love what it is. We love the paradigm shift of taking it, you know, these currencies that can essentially be manipulated and are distributed, you know, via a ledger. We think it's amazing, but speed is the thing that we kind of look for at Filler. Yeah.
I can maybe take it a different way though. I think we need to be separating what's the option and the optionality around cryptocurrency and the options of the optionality around blockchain as a tool. And I think that this is where, for the first time, because I've been working in blockchain since 2014, and this is for the last 12 months, the first time I'm really starting to see really exciting new endeavors and fintechs that understand the difference between blockchain as a tool versus blockchain as the business as a whole. And I want to be really clear, there's some incredible businesses and crypto companies out there that have entirely surrounded the business around blockchain. I'm getting very excited about the businesses that are using blockchain as a tool of what they're doing. So for example, there's a company here in Australia called Grow Super. They're providing B2B tools for the superannuation sector. Basically back office efficiency and mitigation type tools. And one of the core things they're offering is utilizing a blockchain ledger to do different types of activities, whether that's auditing or whether that's proving the transaction or whatever that is. That becomes really interesting and that becomes really powerful, all on its own. And so that's where I get excited and we're seeing this more and more. I was talking to a company out of Colombia that's doing audit, a former senior partner out of one of the top 4 accounting agencies globally that's doing auditing, like financial auditing directly through the blockchain, which speeds up and very much brings the cost down. I mean, back in my UBS days, one of the first integrations of blockchain the bank ever did was from a notary perspective, was to use blockchain as a notary tool. That's where I get excited, is that split between the crypto space and the blockchain space and how the tool can be used effectively. And to Chris's point, Bitcoin is obviously the one that everybody knows, but there's a variety of different blockchains out there. that you can use that are much faster and much more efficient. Whether the Ethereum being the a very good example of this, where the speed is much faster, still not as fast. And that's the thing that we also have to balance too. As fast and as powerful as blockchain is, if we start looking at it just as a tool, just from a speed perspective, it's not as fast as an IBM Z server is to go through and process hundreds of thousands of transactions in a second. That's just the truth of it. So I'm getting excited that we're starting to use blockchain just as a tool, separate from a cryptocurrency. But I think it's important to note that, there are still limitations that will change as we continue to move down this pipeline and as we continue to see advances in the technology.
Brian, I really have to echo that thought. Sorry, and you've reminded me of something, that blockchain being used for other purposes, data transfer as opposed to actual currency, is a really powerful platform. And so, yes, I really just want to echo your thoughts there, 100%.
Thank you very much both for your comments there. We appreciate that. Another one that came through, and just to go back to Brian, Brian mentioned that businesses entering Australia having difficulty with the Australian regulatory space. As an example, for regulators with overlapping roles. What specifically are some examples of reoccurring difficulties encountered in this respect?
Yeah, I saw that question. And Tim, thanks for your question. Tim, I looked you up in the background and noticed you're a solicitor. And this is where I say I'm not a lawyer. Just want to be very clear about this. But that being said, and I'll just speak from personal experience. So, with Startup Bootcamp, we've accelerated now 27 fintech companies. 24 of them have been international companies coming into Australia. And every year it seems like we have the same issues, which is around I know you have only good intentions, Tim. What kind of question, we tend to see the same questions that our startups are asking, which is really around what can we do and what can't we do? And what we're finding is there's just a lack of good information out there around what do I need an AFSL, or what do I need to be in the regulatory sandbox to do versus what I don't need to do. Now, there's some things that are really simple, right? If I'm not touching the money, or if I'm not providing financial advice, if I'm just offering, an organizational tool, that probably is not going to be regulated. But what if it's in that murky ground where it's a personal financial management, where it's not touching your funds, but it might be suggesting how you use your funds, but is that suggestion then advice? And what ends up happening is that company then needs to talk to ASIC or talk to somebody. And then usually what happens is one of the regulators says, well, we can't provide advice, so you're going to need to talk to a solicitor. So, Tim, that's why now I've got your contact information. It sounds like I'll be talking to you about this. But, there's just that lack of clarity when it's been consistent, and you're seeing the same questions over not one, not two, but 3 years in our case at Startup Bootcamp. That becomes a bit frustrating. And I think that's the issue for me. It's just that transparent, a clear idea of who gets approved to the sandbox, who doesn't get approved to the sandbox, what are the things that are kind of safely that can live outside of the sandbox, what are the things that really we need to utilize for the sandbox, or we need to have an AFSL for. And again, there's some good examples of that, but I think there's still some murkiness in there. So just my 2 cents at a high level on that.
Thank you very much, Brian. Appreciate that as well. For covering up for Tim. I might just jump ahead to a different question that I saw that come through around what other, this came from Tamura-san, what are the roles of large financial institutions for fintech? Does anybody want to open up with that one? Tackle that one?
I feel like I'm talking a lot, but I have some thoughts, but I don't want to be the only one jumping in.
No, that's fine. Go for it.
Over, Brian.
All right. So, I mean, we work with large financial institutions all the time, right? So just on the fintech program, We work with Bupa, Australian Super, which is, so Bupa is a health insurer. Australian Super is the biggest superannuation fund in the country, $160 billion assets under management. We work with, and apologies for the noise in the background, folks. Let me just make that go away. So we also work with Capgemini, EY, a company called Dias, which is a technology provider. In the past, we've worked with NAB, the National Australia Bank, which is one of the big four banks. We've also worked with ANZ. There is absolutely a role that the large financial institutions need to play in any fintech ecosystem. The key is how do we make that tangible, and how do we make that approachable for both sides? So it's very hard for a small organization to work with a large organization. And Takeshi-san, you were talking earlier about the POCs that are being built between different organizations, right? So are there ways that either as associations or as government groups or as regulatory groups that we can make the facilitation of those tests, those proof of concepts, more effective, more efficient, and safer and de-risked for both parties? Does that need to be done at a regulatory governmental level, or does that need to be done at a private industry level? I think it completely depends on what we're talking about, but there's definitely a role that they fit into. Not every fintech is going to be a B2C business. A variety of businesses are going to be B2B or B2B2C or a marketplace or something else that requires the organization of a large institution. And I think the important portion when we're talking about associations and groups like ours is we need to be finding ways that we can better facilitate and create opportunity for the fintechs, but also to de-risk these options for the larger organizations. So what role do they play? They're often, both the receivers of benefits as well as utilizing the fintechs to test out and de-risk things for themselves. So venture, there's a lot of corporate venture capital funds in Australia and in Japan as well. SoftBank being one of the largest and best examples of that globally. But oftentimes when you're investing in these companies, you're investing into a company that allows you to de-risk what you might want to do as a large organization, but would be too risky for the organization to do. And then benefiting from it at the end, oftentimes whether that's holding a shareholding, a shareholding agreement so that you're growing with the business, or acquiring that business to expand more. We've seen that here in Australia with one of the top neobanks, 86400, being acquired by NAB not too long ago. So do large financial institutions fit inside of these associations and organizations? Absolutely they do, because it's an ecosystem and all the sides need to be working and finding benefit. But how can we de-risk that opportunity for everybody and offer incentives, I think is kind of the important question that we should be asking ourselves.
You raised some very good points there, Brian. Thank you very much for that. Kita-san, do you have any, I suppose, examples on the Japan side with that, with the larger financial institutions?
In terms of Japanese domestic market, our fintech ecosystem is based on not on disruptive approach, but on a collaborative approach. So we expect large financial institutions in Japan, so many kinds of support to the industry, such as finding gap and adapting fintech or regtech solutions, which is provided by fintech startups in Japan, and also collaborate with regulators and also providing their own fintech solutions to the market. So many things we are expecting to the large fintech financial institutions in Japan.
Thank you very much for that. And look, I agree. I think that there is a position there where the larger finance institutions and fintechs really need to collaborate and work for the greater. That would be definitely my personal opinion on that one. Well, I suppose we're coming to the end, and I just want to say thank you to everyone for this. I think I'll just hand over to Kohei to do some closing comments. But just want to say thank you to Norika-san, Brian, Chris, Kita-san as well for the information that you provided. I definitely got a lot out of it. Thank you very much.
Thanks, Luke. My name is Kohei. Just in case for those who don't know me, I'm a chair chair of the TIA committee that stands for Technology, Innovation, Education and Research. Yeah, just wanted to say thank you to all the speakers, Brian, Chris, Kito-san, Noraka-san, but also moderator Luke, and also the your support and comments from Vivian and Sakai-san as well from Australia, and obviously Emily as well for putting things together. So it's been great and it was really entertaining from my point of view. I work in the resources sector, but my previous role was actually in the accounting side of things, and I've been dealing with a lot of more personal level friends in the fintech space as well. So that was really personally entertaining and interesting. I guess this is just a start of the conversation, I guess, between Australia and Japan, maybe New Zealand as well down the track. So I hope to see the continuation of this, conversation dialogue happening. And I guess as a chamber, we'll follow up on you guys afterwards and how we may be able to keep it going. But for now, I know time is up, so I just wanted to conclude this by saying thank you very much for all the speakers, moderator, but also obviously everyone for participating in this webinar. So much appreciated, and thank you, and have a good rest of the day.